Well, dear students, welcome back. This flowchart is self explanatory, so please go through this. There's nothing I need to explain here. It is just a time flow. The date which we need to remember is 1st July 2017 when GST was launched. Now let's start a quiz. I have named this quiz as Kabhi Haan, Kabhi Na. Basically, the answer will be either yes or no. So, GST is a value added tax. What do you think? Yes, GST is a value added tax. Sir, what exactly you mean by value added? This is what we are going to discuss today. GST attempts to create national market. One country, one market. Yes, the answer is yes. How, sir? This is what we are going to study. GST has subsumed multiple indirect taxes. Maybe, sir. No. The answer is not maybe, the answer is yes. GST offers continuous chain of tax credits. Taxes paid by consumer. Prior to consumer, there is a chain: producer, wholesaler, retailer, consumer. GST model in India, is it a unified model or it is a dual model? We are in a federal system. Central government, state government. We are following dual system. Burden borne by final consumer. Yes. No cascading of taxes. GST is a path breaking indirect tax. Attempts to create national market. GST has subsumed multiple indirect taxes like excise, duty, service tax, VAT, CST, luxury tax, entertainment tax, entry tax, etc. This is self-reading. India has adopted dual GST model because of the unique federal nature or structure. GST is a value-added tax, offers continuous chain of tax credits, burden borne by final consumer, no tax on tax. This is no cascading of taxes. So, dear students, welcome to the regime of GST. We would study how goods passes hands from manufacturer to distributor, from distributor to retailer, and from retailer to final consumer. The manufacturer will charge 18%, 18,000 rupees, and pay the government. The concept is value addition. Value was 1 lakh rupee. GST at 18%, 18,000 goes to the government. Who deposits this amount? The manufacturer. But who pays? The distributor pays. He will add profit. 11,200 is the new value created. Earlier 1 lakh rupee. The sale price is 1 lakh 11,200. 18% calculation would be done again, which comes to 20,016 rupees is paid by the retailer. 18,000 which was paid by this distributor to the manufacturer. He would keep the amount 18,000 which he paid. He will deduct the balance amount 2,016 rupees paid to the government. GST is 2016. Output tax minus input tax. You can also simply understand that the value addition was 11,200. 18% of 11,200 will be 2016. Do not get confused at all. Now the retailer is selling it to the consumer. So cost to retailer is 1,11,200. The retailer wants to make a profit of 24,640. So sale price to the customer is 1,35,840, and the customer is going to pay 18% amount on this price, so which is 24,451. Retailer had paid 20,016 rupees to the distributor. So already 20,000 has been paid. So this amount is getting subtracted. So 4,435 rupees and 20 paise retailer is going to pay to the government, because value addition was the profit element. So 24,640 rupees is the value addition. If we calculate 18%, this will come at the same amount. So overall, what is the cost to the customer? The cost is 135840 plus final GST amount 24451. We have been saying that the final burden of tax is borne by the customer. So if the customer paid the tax amount as 24,451, so this amount should go to the government. Primarily 18,000 went to the government. Who paid this? The manufacturer paid this. But this 18,000 manufacturer received from distributor. Now, when the distributor sold to the retailer, the distributor deposited only 2016 rupees. So 18,000 plus 2016, keep on adding, take a calculator. Now the retailer deposited 4,435 rupees. Add this amount. So all these three amount would come to 24451. This is the amount paid by the consumer. So I think this is absolutely clear. Need for GST in India. Before GST, there was VAT, but there were a lot of deficiencies have led to goods and services tax cure for ills of the erstwhile indirect tax regime. We had VAT. So state level was VAT, for central level Sen VAT was unsystematic and fragmented. Certain transactions were subject to double taxation, goods as well as services. Why? Because the distinction was quite blurred. Example was software. Should we consider software as goods? Yes. Okay, then tax as goods. But software is also services. Then tax software as services. Cascading of taxes. We'll take a small example. If goods were manufactured for rupees 1000 and excise duty was payable at the rate of 12.5% and VAT was payable at the rate of 14.3%, the total tax, that is 12.5% plus 14.3%. Assessable value of goods under excise law. So we know that goods were manufactured at rupees 1000. So we are going to calculate tax on this amount, 1000 rupees. So 12.5% excise duty, this was the central tax, 125 rupees. Now the state tax, which was 14.3%. Now what you need to understand is, this calculation, will it be done also on 1000 or will it be done on 1000 plus 125, which is this amount 1125. So technically it should have been calculated on 1000 rupees, but actually it was calculated on 1125 rupees. That means you are paying tax on tax. This 125 rupees was a tax amount. So you are paying 14.3% on rupees 125 also, because here you are paying 14.3% on 1125. If it was paid on 1000 rupees, the amount would have come to 143, but the amount here is 160. So total we are paying 1285. We are paying 28.58% as tax, but we were supposed to pay 12.5 and 14.3, which comes to 26.8, but we are paying 28.58. So this situation is called cascading effect. Basically, we are paying tax on the tax amount. This 125 rupees was the tax amount. This was not manufactured cost. The set off of one against the credit of other was not possible. Like in GST, we showed how input credit was taken. In this system, this was not possible. And there were several taxes in the state, like luxury tax, entertainment tax, etc. So few states were adding luxury tax, few states were adding entertainment tax. So all these burden were borne by the consumer. Subsumed means their existence is over. Only and only GST is the boss now. VAT on goods was not integrated with tax on services at the state level. The states, they lost the tax buoyancy. Lesser collection by the state. VAT on goods was not integrated with tax on services. These are old deficiencies. We need not go into much depth and details not required. CST was another source of distortion in terms of its cascading nature, since it was not VATable. Being an origin based tax, CST was also against one of the basic principles of consumption taxes, that tax should accrue to the jurisdiction where consumption takes place. Earlier means pre GST. If a dealer in Delhi purchases goods from a manufacturer in Punjab for 1000 plus 20 rupees, that is 2% CST, 1020 rupees, and sells such goods within Delhi for 1200 rupees, the tax rate on sales is 12.5%, and hence output tax liability is 150 rupees. Credit of 20 is not allowed while making payment of 150, and hence the dealer has to pay 150 as VAT. I'm sure you have understood this, and we continue again. Thank you.